This is the most requested tips video I have ever received, and it's the question I get asked a lot. It was asked so often that I included it in my Q&A as the first question. So what we're going to be talking about today is how do I determine my stop loss, my entry, and my take profits. This is all very crucial to being a successful trader, and I think everybody's trying to find this holy grail system saying, only if you'd be surprised the amount of emails or messages, DMs I get that I receive saying, only if I had a proper stop loss placement, I would be a successful trader. Only if I had the right target area. Only if I got entered just a bit lower, I would have made the trade, or it would have been a successful trade. I'll just tell you straight up, that is bullshit. Stop losses, targets, entries are probably the least concerning. Everybody thinks that that's what's going to make you a successful trader. It's not. It's honestly the easiest part of trading. And honestly, in my private group, this is where people have the least questions. Okay, so let's just get straight into it. First of all, let's just get this out of the way. Rarely, it is the stop loss, take profit, or entry placement is the reason why you are not a profitable trader. That is bullshit. That is most likely not the reason. Okay. Secondly, just because I do this does not mean that you should do this. If you're finding success in something else, you should probably stay with it. There are thousands of ways to take profit, and there are thousands of ways to manage your stop, your entry. Think about it. Every time that you're pushing the buy button, somebody else is selling, and then every time you take your profit, someone else is buying that. You're buying your profit from you, and clearly when you're getting stopped out, somebody else is buying that position or selling that position. So clearly there's, people are buying and selling everywhere. So there's lots of different ways to manage these, or to figure out how you want to be trading them. That's number two, I guess say. So let's just get straight into it. Enough talk. Entry. This is very easy. We simply buy and sell at our proximal line on our entry time frame, supply or demand zone. So here we go. This is from a picture from the course. So if we have a supply zone up here, our proximal line is right here, and vice versa for demand. Our demand zone is down here, our proximal is up here, our distal line's up here. If we're going to be buying in this demand zone, we want to wait for prices to come down, and then we get filled. We're going to have our buy limit right here on this proximal line, and we're not going to have our buy limit down here. We're going to have our buy limit at the proximal line of the demand zone. This is why we need to first learn how to draw and identify supply and demand zones. If you haven't seen those, they're in my tips series. They're video 1, 2, and 3. Strongly recommend that. Okay, it's very easy. Entries are very easy. We just simply sell at the proximal line. If price comes up like this, we set our limit sell order right here. And as soon as it touches that area of the supply zone we marked out, that's our entry. You see it in all my charts. We're going to go through it here and we're going to say, okay, well, here was a USD Swiss trade. Let's just talk about it right now. Why did I enter here at this pip right here? Well, because my proximal line, how I draw my supply and demand zones, are like this. So why wouldn't I put if there was a big stack of sellers here, I'm going to sell again when price comes back up. So price came back up. This is where my sell limit was, my pending order. I waited and I shorted. It's that simple. It's the same thing if you wanted to be buying down here. Say that's your demand zone. Just say that's your demand. You're going to mark out your supply and demand zones. You're going to see price come down, and you're going to have your buy limit right there, right at your proximal line. Okay, so let's just remove this really quickly. So that basically covers the entries, okay? Before we actually enter the trade, we actually need to determine where we need to be placing our stop loss, right? So, well, you might be asking, how do you determine where you place your stop loss? Well, there's two types. Here we talk about it right here. Stop loss. There are two kinds of stop losses that we use in this methodology. There is a structural stop loss and a volatility-based stop loss. A structural stop loss is basically, well, one quick thing before we even talk about this too, is your stop loss. This is different for everybody. This is, some of you might say, hey, I want to use a structural stop for this. Some of them might be like, nah, the structure's too high or too low. I'm going to go with a volatility based. And, there's going to be a split. There's no best way to do it, but it's kind of just an experience thing that you gauge and you kind of feel, you look at the market and you say, okay, what do I think I should be using? Should I use a structure or volatility based? So let's continue on. Structural stop loss. This is based on previous structure of the market, typically above or below swing highs and swing lows. And it's usually at the next supply or demand zone above or below price. Obviously, if you're selling, your stop loss is going to have to be above, right? And if you're buying, your stop loss is going to have to be below. The next one is going to be your volatility-based stop loss. If you want, you could use an average true range just to determine your volatility in the last couple days. This will help us determine how many pips we should place above or below our distal line. So remember, if we go back to this picture, so if we're selling, obviously our stop loss is going to have to go above here, and our stop loss for demand is going to have to go down here. So if we want to determine where we should put it, well, let's just say I was going to get short here, which we did. We have our entry figured out. We need to figure out where our stop is. And if we're going to use a volatility based or a structure based. So let's just put it right here. That's where the zone is. Let's make this bigger too for you guys. This is probably going to be a longer video. I don't know how to increase it. How do I increase the size? Okay. There. Hopefully you guys can see that. So that's where our distal line is. This green arrow, this green line. So let's go all the way to the left and see if we should use a swing high, or, above or below a supply or demand zone. Well, here's where our stop would be. Do you think we should be above this supply zone, or we should keep it right where it is? Well, we should probably do a structural stop and go right above it. So that's going to be our stop loss. And think about it. If you're trading this USD Swiss, you're going to have to cover the spread too. So in case the price actually manages to break through and go like right up to here, you don't want the stop loss stopping you out by the spread when prices never actually got up there, because you're going to have to cover the spread by at least 2 or 3 pips. Right? That's going to be more of a volatility based stop loss. So a structure stop loss, you're just going to go above price to find the next structure. So if you're going to be using a structure, you do that. But if you want to use a volatility based, obviously you're going to use maybe something volatility based, maybe just something to gauge you, maybe an average true range. Let's pull that up. You can determine what the average true range is, however you want to determine it. We have our rules, you might have yours. So you figure out how you want to determine your average true range, and then you go from there. So say you want to, I don't know, maybe what the average true range is like 6 pips. Well, then use 6 pips because you want to be above the volatility based. Okay? Or maybe you want to use a percentage based on the average true range. Maybe you don't even want to use an average true range. Maybe just every time you want to be using a covering the spread. So if the spread's like 4 pips, maybe you want your stop to be always like 4 pips or something. Whatever the bid and the ask is, you want to be above your distal line by that amount of pips. Okay? This will be determined by the type of trader you are and what you kind of feel like what you want to do. What's important is that you stay consistent with it. Don't be an idiot now and go off and trade it this way, trade it that way, one trade it this way, another. Stick to your rules. Okay, now that we determined our entry, our exit, our stop loss, this is the holy grail now. Where do you guys think that we take profits? Get to it already. Well, first of all, like we said, this is not the holy grail of how you take profits. There are so many ways. I know traders that trade supply and demand that take profits that call me an idiot for taking profits here. And then, some of them are like, yes, that's definitely where you should be taking profits. Everybody's going to be doing a little different strategy determining how they enter or how they decide on their profits. But let's go look at it. Targets. This is easy. This is the easiest because it's very rule based depending on the trader, like we just discussed. How I personally take profits is I get out at my entry time frame at the first opposing supply or demand zone, usually at 1.5 to 1 or 2 to 1 risk reward. And then I will hold my second position on my second target to a +1 time frame. That's higher than my entry time frame. So if I'm buying on the 1 hour, I'll hit my first target on my 1 hour, and then my second target is like the home run trade. That will be on my my higher time frame. So let's go to the charts and see how did we do this. So we determined this is where our entry is. That's where our stop is. We have to figure out where our exit is. Well, our exit's going to be at the first opposing rally-based rally or drop-based rally demand zone. Well, here is a demand zone right here. So I want to make sure my target is right before this. So maybe right here. And that's what it was on my thing. First target was right here. That was my first target. Right down here. And then my second target was at a +1 time frame, so I had to go to my 4 hour. So there was my 4 hour chart, and I got out right here, right before this rally-based rally 4 hour demand zone. Let's go see what that looks like. It was like something right around here, I believe, was my second target. Yes, so it was down here. I know you guys can't see it, but let's pull up charts and let's just quickly discuss saying, hey, would you use, where'd your entry be? What kind of stop would you use? What kind of targets would you use? So let's talk about the most recent trade I took was New Zealand yen. Let's go to the 30-minute time frame. Here was my entry time frame. Here was the supply zone, how I mark out my supply or demand zone. Here was my proximal line, my distal line. Now where is my entry? It was right at this proximal line, right? This is my rally-based drop supply zone, so I want to be selling here as soon as price comes in. I don't want to be selling when it comes deep in or chasing the market when it leaves. So my entry was right here at that line. Where is my stop? Well, let's look to the left. Do you think my stop should be above this? Probably should be above this. So it's going to have to be at least somewhat structural. And plus I wanted a couple pips above. So, call it 2 pips or something like that. I think that's what it was. My stop was like something like that. Stop was up here, enough for if the spread, once price was all the way up here at one time. So it has to make sure it covers that spread too, so I don't get stopped out. So it covered the spread. This is where my stop was, just above the zone by 2.5 pips. I got filled, and where was my first target? My first target was right before this rally-based rally. So my first target was like something right here. Okay? So right before this rally-based rally demand zone, the first opposing demand zone. Oh, well, I got filled there, so I actually didn't get, like, that's where my first target was. But yeah, it was either right here or right there. But anyways, it was before this rally-based rally. Got out, and then I held my second position, and I got out before this, which was, I kind of screwed up these arrows, which was right here. I got out. Why did I get out there? Well, let's go to, the 4-hour time frame. Let's see. Why am I getting out there? Well, because we have a drop-based rally demand zone right here on the 4-hour. So I want to be out before that. So that's where my second target was. I already captured like a 3-to-1 move, so I should get out. I'm happy with it. So I got out. Let's see. Yeah, I think you guys get it. Let's go back over. Obviously, entry, exit, stops, easy. Don't know really why I'm showing you this email. Watch it again, figure it out. It's very simple. It's based on, your strengths and weaknesses. If you guys want to figure out how I actually manage the trade, I did an excellent risk management video. I'm going to throw it in the next video after this. I believe I can. It's my risk management video in my, I'll link it down in the description and maybe I'll post it in the comments. It's a really good video. It's about how I determine my risk management and how I manage the trade after I'm in this. So after all this is done, I get filled. How do I manage a trade? Okay, so that's it. Hope you guys enjoyed this one. This was a big one. This was a well requested one, how I determine my entry stops and targets. This kind of just briefly goes into detail how we determine it, but it's pretty simple in my view. But good luck trying to execute it over and over and over. But if it doesn't make sense into your rules, then don't trade it. It's that simple. Okay? And I think my next tips playlist video is going to be multiple time frame analysis, maybe. All right, and I think that's everything. And if you guys wanted, obviously, the newsletter, go to themoneyballtrading.com, grab that newsletter, baby. And Black Friday's around the corner. Get ready for that. All right, but if you're listening to this in the future, message me. You guys know what to do. Cheers. Thanks for watching, guys, and talk to you guys soon. Love you guys. Bye.